Microphone check and screen share check, please. Thanks. Good evening, guys. Nightly strategy podcast for Tortoise Capital for September 16th, 2022, Friday night edition. So we're looking at the weekend reports. We'll start with the regression line fractal framework. We like to do that on the weekend. Get a hydraulic view of what's going on. And the RL10 is this blue line. That is our proxy for price. So you can see where it makes highs and lows. The black line is the RL30. That is the health of the trend. So when that rolls over and starts sloping down, that's where you're going to start seeing owl patterns, and then those become long-term persistent plays. And so the slope tends to be the health of the trend. So you can see that that's pretty unhealthy trend right now. The green line is the RL90. That is the health of the next higher time frame. So you just multiply the RL30 by 3, and that gives you the RL90. So that's the next higher term time frame. So his slope also matters, and where those turning points happen are crucial. And you can see right here, this is really an important moment in the 90 because it doesn't turn that often, and when it does, it tends to be decisive. So we're going to be very alert to this as a very critical state right now because of the shape of the 90. And then when the 30, the black line, crosses the 90, that's an important early warning to potential downside movement. And then finally, the last regression line is the 270, the RL 270, and that's the long-term buy and hold fair value. So the difference between, let's say, the trader's price, which is the RL10, which got to a bottom here, we would compare that on the same time frame to what the long-term buy and holders say is fair value. And so the difference between those two prices is the difference between aggressive traders and their price and what the long-term buy and holders think is fair value. And in that difference, you can see the power of the traders to move price away from that long-term fair value. But then there come times when, like here, and way back here, when the RL10 is equal to the 270, then you have agreement on the long-term buy and holders and the trader's price. And so for that magic moment, there is agreement on what the price ought to be. Now that usually doesn't last very long. The first thing that happens is that traders start moving it away. Well, like we saw up here, once the traders started moving it away, you start getting that gap between the 270 and the 10, and that creates the tradable opportunity for retracement to the RL270, or reversion to the 270, I should say. And then we can measure the distance between those peak excursions in both directions, and then we can measure how far those are in a percentage basis, and that gives us the ability to estimate how far price can go on each little excursion. Finally, I'll just draw your attention to this gray line. If I can draw that. This gray line in here is a Bollinger Band 30 plus or minus 1 on the RL270 itself. So it uses the RL270 to create this little envelope. It's normal for it to be on one side or the other of the 270. When you get a very thin ribbon, when the RL270 is flat, that's an indication that we're coming into a a critical state. You can almost see that happening right in here because the RL270 is flattening out a little bit, and the width of the Bollinger Band is low. I treat that as a buffer zone. So when the RL10 and price cross the 270, it doesn't become interesting until it gets above the noise buffer. So that's sort of a decisive move as it gets past her. Now that did for a brief moment here, but when it couldn't sustain, that was the first warning that maybe we're running out of steam in this bear market, this little recovery. Because what you had was the RL10 crossed over the 30, then the 30 rolled over, and now you see the dragon rolls over. That's the 10-period Bollinger Band mean. And now you have the 30 crossing the 90. That's the next generation of warning. If this is the 10-30 crossover, this is the 30-90 crossover, and that gives you your second warning. The final warning will be when the RL90, to the downside I should say, if this RL90 continues to fail like this, at some point in the next, probably 2 weeks, you would see the RL270 down here. The 90 would cross the 270, and then we're back into runaway bear again. The last time that happened was way over here. That the 90 was trying to come up. It couldn't even get back to the 270. It just rolled over again, and then you get this horrible bearish move. Now, what's really disturbing about this one is that if we look at this through a Kata 2 lens, you can see a peak in the RL90 and then a lower peak in the RL90. So the fact that that's lower is just reinforcing that on the longer term this is problematic. And the problem is that this is just starting to fail. Now, this price level right down around in here, around, let's call that 370, you're going to notice that's the bottom of the dragon. That's about the bottom of the RL90. It's the bottom of the RL30. So if that cracks, look out below. So we only have about this much buffer before the emergency sirens start working. And remember, in this big long sell-off, we're already we only saw that much price action below 370, and we are within that little buffer range right now. And if we take a look here, we see the previous bottoming out of the RL30, and then the peak of the RL30 or RL10 could only get to here and rolled over. Just barely got out of the dragon and rolled over again. Now, right now, this is where price is at the red dot, because price, especially on the downside, accelerates faster than the RL10. Now, the RL10 is pretty quick and adaptive, but you can see right there the extra pain and suffering from price is at the red dot, and the RL10 is only at the blue dot. And the price has already gone through the belly of the RL10 here, so we're technically in a collapsing dragon now. When the RL10 crosses, you have confirmation. Like if this RL10 continues to drop and somewhere right around in here crosses the belly of the RL10, then that is really another warning shot to the downside. So this is a pretty important critical state where we're at right now. It could still hold and bounce, but then it has to get through this peak of the RL10 for an emerging dragon. But if this continues to fail, now we can go back and look at these price levels. Here is a support level at the belly of the RL10, which is like that one. That's one. The second one here would be at the violation of the belly of the dragon, and then the third one would be the belly of the RL10, and then it's really catastrophe. So we are in pretty tough shape right now. Just 2 to 3 weeks ago, we were happier than dead pigs in the sun in this market because everything was going well. Figured it all out. Not so much. This little symmetrical pattern right here, that triangle is really problematic. That's the bear trap. That's the fangs of that bear sinking his teeth in. So that's the RLFF assessment. Critical state. The trade to the downside is strongly favored. The upside's not impossible, but any signals to the downside should be exploited on the short-term trade. Shift to the structured RL, or to the structured market 150. So now we're looking back 150 days. You can see that we said last night we were checking to see how it would react to this support level. We saw today a gap down and sold off. So it blew right through that. And now we're testing this one next on Monday. Don't be surprised to see that fail. And then if that fails, it comes down to test this support level pretty fast. That's a former 30-day low. That's like a 60-day low right there. But that's trouble. And then if that fails, it's down to this PSAR flip and RL10 bottom, and that's also the 150-day low here. And if this breaks at around 360, whew, not so much. If we zoom into the 30-day look, being fractal, again, you can see here was that test yesterday where it closed just above that support level, blew right through it, sold off sharply, had a bit of a recovery, but could not close that gap and closed at 385. So if this low breaks, look out below. Upside targets, PSAR, it has to get through the dragon, which is here, here, and here, and then that's the reasonable upside target. Tactical trade. It has to get above the RL10 peak to really be an interesting trade, to get back to the 10-day high and the 30-day high, which is way up here at 430. Remember that? That was 15% ago. The 30-minute chart, now we're looking at 10 days and 30 minutes. And you can see here was the gap down from yesterday's close was here. Here's the gap down, sold off, and really just petered out. So this was a selling day. The only thing we can say about this is that's all the further that it fell. The fact that it didn't fall any further in the afternoon and had a little bit of recovery is faint praise of a type. But really, if this breaks on Monday, look out below. You can see that the 30 is very orderly. Every time it rejects the PSAR, that's a signal to the downside. Take a look at the sector's performance today. So the SPY, our baseline, was at 1.17. The Russell was the only thing worse at minus 1.5. Emerging markets minus 0.9. Treasuries minus 0.8. Still below 110. That's problematic. Diamonds and tech were the only sign of strength, and they just lost less. But that was pain and suffering across the board, starting with the U.S. indexes doing the worst. Not a healthy sign whatsoever. Even Tesla, which has been the most resilient, was down a fraction here. It still held above key psychological price level of 300, though. All right, let's look to the downside to find those things that were worse. Again, here's the S&P, minus 1.17. So you've got lithium, minus 1.3. Materials, lumber, clean energy, uranium in this cluster of sectors from 1.58 to 2.2. Then you have oil exploration, the other lumber, biotech from 2.7 to 3.4. You have both ARCs, which were strong yesterday but got slaughtered today, 4.7, 5.1. And then all the Bitcoin and financial disruptors getting smashed. Robinhood down 9%. Ethereum off another 6%. Squarespace 6.2%. Coinbase off 4.1%. Devon Energy in the companies minus 3.8 on weakness in energy. PayPal off 2.5. So the financial disruptors were getting smoked. And then our metal companies, there's two metals, 1.5 and 1.58. We highlighted Alcoa as a probable mover today. So pain and suffering all around. Let's take a look at what worked today. Again, here's the baseline of the S&P, minus 1.17. Here's the cut line between positive gains, negative losses. So, sectors. Brazil off 1%. Marijuana, 1%. Finance, down 0.9. Bitcoin and consumer discretionary, off minus 0.8. The FANGs, minus 0.6. U.S. tech, Mexico and blended commodities between 0.56 and 0.36. We had food off 0.10, still above 20. Real estate, 0.08, and now we're into the positive territory. The Aussie dollar up a sliver. Commercial real estate, 0.16. Oil and staples and wheat and precious metals was the first one where we saw a significant jump. But commercial real estate, oil, and staples between 0.16 and 0.24. Wheat and precious metals, finally a strong day at 1.3. I'm going to show you that trade here in a little bit. And then the VXX at minus 3.45. Individual companies. Here's our semiconductors. NVIDIA, Texas Instruments, and Intel between 2% and 1.4%. So the whole sector was moving. There's Microsoft down 0.26. U.S. Steel minus 0.8. So it was better than our other two metals. That's the metals. But so the metals were still mostly weak today. So not much to choose from. And even the ones that were in the green were not in the green by much. So this was a broad weakness in the market. Take a quick look at some sniper trades. This is in Intel on a 3-minute chart. So this is, let me show you the, so here's the OR3. That little segment right there. I consider this like a 1, 2, 3 around in here, but I wanted to see the RL10 work, and I just was waiting for price to take out the PSAR. It finally did. I like the fact that it had a support level there. Here's the standard risk box for Intel. It gets interesting if it can get above the previous RL10 peak. That's when it becomes good. And then this is the tactical trade inside here, where all I'm trying to do, tactical, The tactical trade, the purpose is really just to get my risk, which is here, up and above the entry price, so that I can lock in, you guessed it, no lose plus dinner for two, the important psychological state that lets us turn this into a science project. So with that frame in mind, we're in, and it starts working. It makes a run. It has a peak up in here. It gives me a 1, 2, 3 exit, so I just take it here instead of waiting for it to come all the way down there. So on a 1 unit of standard risk, we make about 1 unit of standard reward, so we're about +1. Check or hold? This was a potential short, but the semis as a group were doing better than just about anything else. So I was not interested in getting short the strongest companies in the strongest sector, to my regret. That's one of the things you got to be prepared to just live with, is that you make a decision and you decide to manage your risk, and so that trade's not there. I mean, the trade was there. I just wasn't there to make the trade. Now, however, what I notice is that I still have this low, and now it feels like a higher low. And I've got the descending PSAR, and it's had one surge to the upside already. And semiconductors have been better than any of the other things in the market. And it's making the turn, making the entry at a slightly higher level than I had before. So it feels like this thing is slightly tilted to the upside. So I don't mind getting long with a standard risk box on it right here. Check or hold. You should be able to see the higher lows, the reasonable long-term sell-off. This was not sign of a panic selling here. This little piece said that there was actually some buying pressure in that area. One last little dip and it reverses. So we get the entry at the green dot with a standard risk box. And that's a quick loss. It gives me the same entry again. This is starting to get problematic because now I've got these lower lows. That's supposed to work. Standard risk box in play. And this is the same entry level as the previous one. It just didn't stick around long enough. So that sell-off was not, it wasn't horrible. And I'm going to try the PSAR flip one more time. That one slowly grinds north. I take the standard exit. This was one where I could have maybe put a second position on, but that was already like so close to the previous peak that I wasn't all that interested. By this time, the rest of the market was all selling off, so I really was content just to manage one and then to take the exit and just be happy to get out of it. And there's 1 unit of risk, there's 1 unit of reward, so we're a little bit over +2 right now. And I think that's all we did in Intel. Yep. So that's one of the trades of the day. The other one worked out was wheat and precious metals. Now this one was interesting because it's been underperforming, but today it jumped to the top of the stack along with the semiconductors pretty quickly. So here's what that looks like. This was yesterday's close right here. And here's the OR3. and it's starting to bottom out with the RL10, and feels like it's trying to hook up. So this could be interesting. I'm noticing that the PSAR is coming down. So somewhere, if that continues to fail like this, somewhere around in here, the price is going to meet the PSAR, and then there's probably going to be an entry somewhere around in there. Check or hold. So I can anticipate that a little bit as I'm reading that price action. You've got to read the tracks. And sure enough, we get the rising price after it bottoms out at the bottom of the RL10, which is where the PSAR flips. We then get the PSAR flip. Here's the standard risk box of about 20 cents in Wheaton Precious Metals. So our stop is here. And right about at this point, just 2 bars in, I can raise my stop to here, and then when the PSAR picks up, start following the PSAR. I wouldn't object if you just decided to trail with the spine of the dragon, or the belly of the dragon, or the upper skin of the dragon. You know, pick the one that makes you feel good. You know, pick the one that you're going to stick to and are committed to being satisfied with. Now, when I'm at this level, at this price level right here, and I see, yeah, I'm committed to the PSAR, I might look at that and say, you know what, I'm not willing to give back all of that price. So I might say, yeah, there's the PSAR. I'm just going to jump this up and move it underneath the lower lows, you know, the lows of that little shelf. I might just say, until this PSAR finds his way north, I'm just going to jump the stop to here, because that's where it's holding support. So if it were to violate below that, then it's no longer holding support, and I really don't want to be in it. So as you eyeball this, and you want to put an aggressive sniper on this thing and override the PSAR, you know, I could see you putting it here, or maybe under that little lip right there, which is the spine of the dragon, or the upper skin of the dragon, or the lower skin. Any one of those three allows you to preserve that extra piece instead of letting it come all the way back to the PSAR. So your mileage may vary, and you got to sort out what is satisfying to you. Now on this one, that none of those stops were hit. All right. So whether you were here, or here, or here, or whether you just stayed with the PSAR, no harm, no foul. Now the PSAR is here, and you might want to move that up into here, or like a 3-bar low, or keep it with the belly of the RL10 and be right about here. Any of those are okay. I took the PSAR. In retrospect, what's the big deal? Why not just always just take the PSAR and just live with it? Well, because sometimes when you get a big aggressive move, like when it broke above this support level, that thing just rocketed straight north while everything else was suffering. So I don't want to do just the routine stop and give back a bunch of that, because I don't know what's going up. It might have just as easily rolled over. So when you're managing your positions, you've got to balance your risk appetite and reward appetite. In this case, it turned out that the PSAR flip by consensus was a good time to get there. And then similarly, I didn't go short on this one. Could have. Now I'm sad. So now we come down to this price level. It seems to be stabilizing, holding right here. So now this feels like what kind of pattern? We had a strong move up, has decayed slowly, establishes a higher low, and then does a PSAR flip, caught a 2, standard risk box, Standard exit for half an R. So this one is about 1, 2, 3, 4. Plus 4. So now we're at about plus 4.5. That one's about 0.5. And now you can see like another possibly COTA 2 getting ready to happen. If this price can get through the PSAR somewhere around, right around in there, that might be the next trade. So let's see if that happens. Kinda, yeah. And kinda scratch. So kinda nothing. But it was, a shot worth taking. So that ends up at about 4.5 for the day. So we could live with that. Let's take a quick look at the traders, see what they got today, and then we'll jump to the weekend report. Oh, gracious, pardon me. All right, here's Luke. Looks like he's feeling a little better. Sees the harsh sell-off that bottoms out. P1 crosses the baby dragon. Does a PSAR flip right here. He waits for the breakout above the dragon, so he gets that here. There's a quick sell-off. It reverses again, so he just hits it again. It gets about plus 2 in hand, gives back a full 1, and still collects 1.2. Here's a PSAR flip. He hits it, had some fortitude holding all the way through here, gets 1.8, plays the PSAR flip as the rest of the market is selling off, nails it for 1.8 for a total of 3.8. Pretty good shooting. This is Woj with his series. So Devon Energy, he smashes it good. Here's the market opening, immediately sells off. It moves 2 risk boxes off the open, and then he gets short with a 1 risk box trail. Hits it for 2. He sees it getting lower highs. Waiting for a clear setup, which is your collapsing dragon. Picks up another one, just like downtown, so plus 3. Tesla monkeyed around with it a little bit here, tried to get short. It rebounded. He re-enters short. It scratches, so he says, you know what, too much chop, done. Because then Luna, the crypto, yeah, he tries the SSC, quick stop and reverse, gets a little fraction, missed the next short on the collapsing dragon, tries to get short here, takes a minor loss, stop and reverse, gets paid, and then gets this COTA 2, very nice. I just noticed that 1.7. So plus 2, plus 3 is plus 5, minus 1 is plus 4 for the series. And his last one is minus 0.1 on the Aussie dollar. Scratch, fractional gain. Missed this one. It was a span of control issue. He was already making plus 5 on the other one. So he doesn't get that one until he sees, I got to get it. And then quick loss, quick scratch. And he says enough. Even though there was a PSAR flip and a COTA 2 here, both of which would have paid off still. Total for today, 3.1. Total for the week, 8.5. Woj just quietly getting this thing done. Really has turned it around. I think he's cut out a lot of the choppy trading that he was getting when he was concentrating on a single signal. So I'm really happy to see him kind of settling into it. And that was everything from there. We'll check the daily reports now. Or the weekend report, I should say. Sorry about that. All right, so weekend reports for Saturday. Let's see, where am I? There we go. Bearish normal, weakness all the way across the bar. Now everything is below the 50-yard line and really weak on the 10 and the 30 and the 270. So that's not a good sign. ETF2 exposure went from 50% exposed to 0 because now all 10 of the primary indexes are below their 4-month moving average. You can see that the risk Z is still showing clearly risk off, in a critical state, ready to break down or maybe get some traction here. We've already seen the health checks and the sniper. Sorry. Yeah. So ETF 13, we're going to look at the blended monthly rebalancings now. All of the 13 are below their 4-month moving average. Even the best blends that have had the best 3-month performance all got slaughtered today. The only things that did less worse were some of the old school things that had a little bit, but even they were slaughtered. That's how bad this week was. And then in the ETF 22, only discretionary and utilities remain above their 4-month moving average, but even they got slaughtered. Didn't matter where you were this week. Long term, it was getting. This feels like a bear trap where the previous 5 weeks, where that thing had bounced 10 or 15% off the low, got people comfortable and back in, and they may have forgotten that it was a bear market, and now this week just crushed. There's a lot of hopes and dreams being crushed right there. ETF 32. In addition now to XL, it adds clean energy. That's also above its 4-month, but that had a bad week also. There was only silver at 3.87 was in the green this week. Pretty slim pickings. In the Dow, Merck was positive for the week. Johnson & Johnson, healthcare. And that is it. Not much to choose from in here. Only a handful of things are above their 4-month moving average. Walmart, Disney, McDonald's and Disney, or Walmart and McDonald's. The only ones remotely of interest to me right now. Looking at the world market model, the U.S. remains comfortably above average. The rest of the other regions are getting smoked. Even the other asset classes, no love in here for precious metals or commodities, or even real estate got murdered. It's in the white, but it was not a good week for real estate either. Cash is looking like king. Take a quick look at the ETF liquidity report. We're looking at the ATR percentage. These are the top 30 by average daily dollar volume for the last 30 days. In the green are the ones that are liquid and volatile enough for short-term trading. So energy, biotech, semis and oil and gas, Brazil, and the gold miners. Good. We'll hustle to the daily. We've already been through that. Right to ETF tactical. Some more breakdowns on the 10 and the 30 day we're noticing. Only Johnson & Johnson was positive for the day and had a little breakout on the 10-day high. A ton of auto framers, but you should not be swing trading on the long side right now. I would be interested in the 5DDs because they have large payoffs to the upside, but if you saw a 5DD and it failed, you'd have a 5DDF, and those are already starting to fail. And so it's easy to believe the bear trade to the downside. So I would be taking a look at Alcoa, DuPont, Visa, and Walmart. The ETFs are telling about the same story. Everything is on a harsh sell-off. Big breakdowns here in emerging markets. And then all of these, let's see, this is the tech, the S&P, materials, industrials, metals and mining. So no rest for the wicked, no safety anywhere. Buyer's market. The auto framers just showing so many things have collapsed deeply below their 10-day high. The pain and suffering was so great that you're getting incredible multiples for a retest back to the 10-day high. But this is not swing trading territory. This is intraday trading, and then keep 20% if you made money on it on the long side so that you keep a taste. But Cliff and U.S. Steel and Alcoa, there's my metals. There's Microsoft. I'm looking for Apple. Not even close. There's my big indexes. There's the S&P. There's tech, emerging markets, the Russell, Latin America, and Brazil. So this is a buyer's market, and I'd stay in the top 10 right now for intraday trading in either direction. And there's plenty of indexes in there too. The compressions, the squeezes. There's Cliff, Microsoft, U.S. Steel, and the S&P. That's a really good stack of 4 to concentrate on for Monday. Like if you were going to practice this style, you could do worse than those 4. They're all in critical states. We're going to shift to the sniper headquarters. A lot of Godzillas here. Now there's there's about 3 categories of Godzillas on here. So all of them are featured. They have this feature where they are getting smashed on the 150-day look back is horrible. It's in the bottom 10%. The 30-day look back, it's in the bottom 10% of the last 30 days. And on most of these, on the tactical, it's in the bottom 10 or 20% of the last 10-day look back. So by location, these are all getting slaughtered. But now the volatility shows interesting. So if you have green, like International Paper and FDX and PKG, these are ones where the 5-day move is extraordinarily large, 4.5 sigma, and the 1-day large is above average. So green is an enraged Godzilla. Now, green and pink is one where the 5-day uh, the 5-day volatility is large, but the 1-day had collapsed. So it could have been harsh sell-off terminating in a tiny little doji. So the 5-day volatility was large, had a large 5-day, but the 1-day was abnormally small. So that could be a sell-off that terminates in a doji. So the second form of Godzilla that is interesting here is 5-day volatile, 1-day not volatile. And then the last one is where the 5-day and the 1-day are extraordinarily quiet, which is why Teradyne is so interesting, because it's a very quiet on the 5-day and minus 0.98 on the extremely quiet on the 1-day. So this is a harsh sell-off that has culminated in a 5-day range compression and a 1-day range compression. Why isn't that failing further when the market is horrible? Well, the semiconductors are better today, and Teradyne is in that business. So that actually becomes, what's the breakout? Back to the upside if the market rebounds next week, led by tech and by the strong semis? That's not unbelievable. That might even be feasible. Or it could be a further collapse if the semiconductors join the rest of tech land and start getting smoked. So all of these that are down here in Godzilla land that are quiet, like Teradyne, Hewlett-Packard, those are of interest too. So there's 3 different styles of Godzilla that are in here. The green, the green, red, and then the red. And each one of them has a slightly different psychology, but they are all, because of trade location and abnormal volatility readings, special cases, compound critical states, ready to explode. In the tactical symbol set, you've got mostly the green reds, like Cliff, Alcoa, Marijuana, Microsoft, Wood. But now Squarespace and Treasuries are Godzillas, but which are quiet. So very interesting conditions here as individual targets are shaken out. I like this kind of market myself. It's my favorite market. Fireworks and popcorn. Mostly popcorn with the quietudes here. Humana has made a 5-day move but was pretty quiet today. The fence sitters, mostly quiet, although Bristol Myers Squibb has most recently had a large 5-day move, but everything else pretty quiet. In the S&P most quiets, not much of interest beyond the normal, except to note that Tesla is the least volatile stock in the entire S&P 500. Now, were you expecting that? No. But that's the last refuge of the growth community. They're the bitter enders. They are not wanting to sell. So if Tesla is refusing to lose, it was even up for today, and then the market begins to rebound led by tech next week, watch Tesla explode. The S&P most volatiles, again, you're seeing, just like in the Godzilla, some greens, green, and then some green-red. So very interesting. You tell me which ones you like. Very quiet or very noisy today leading in. So either one of them I can make an argument why. I like them both. I'm prepared to trade them, but I recognize there's an important psychological difference between them. There's your sniper auto framer stats. Here's your tactical symbol set with the sniper stats. Notice the predominance of green reds, which was odd because today was almost like a washout kind of day. Being dominated by winter everywhere you look. The NDX is giving you the tail of the tape there in bright colors. Notice the Johnson & Johnson and Merck stood out before. And then the other one I want to just show you is look how Tesla is kind of quietly stabilizing. That's the last bastion of calm hands. There's a lot of pain and suffering everywhere else. Apple's giving up the ghost. Microsoft's getting slaughtered. Tesla, on the other hand, hanging tough. Bear that in mind. All right, that's enough to get us going for tomorrow. Tomorrow morning, True Storytellers, 8:30, the usual time and place. Tomorrow night for the swing trade frames. I'm going to ask Ken H. to get them posted early so I can get it recorded early. We have a soccer match tomorrow night. And then Sunday morning for the Euros in the Creativity 202. Sunday morning. And then Sunday night for final trade reviews. Okay. Monday night at 7 p.m. for Creativity True Story Circle for those in that workshop. It's working amazingly well. I'm watching Griff Cooper and Phil Wu put the finishing touches on the Kata 2 Challenge course, which is the Applied Systems Development course. They're taking my guidance on how to design and adapt my systems for their personal use. So I've given them both guidance on how to do that. They've turned that into a study guide and a procedure and a recipe, and they're using Griff's implementation of the Kata 2 Challenge, which he did all this year and has not had a losing week, trading only Brazil and the Dow intraday. No losing weeks this year. So you're going to see Griff developing that system using my principles of system design, and you'll see his system. And those guys are going to teach and coach it, and I'm going to be there as a silent witness and observer and, the phone a friend if things get interesting. So that looks like a pretty interesting course. We hope to be able to release that in, probably 5 or 6 weeks. And you're going to want to get in on the early bird entry price on that one before it goes full price. They've done a marvelous job on that. And my brother's got the sniper course up and running. That's another case where successful students of mine have taken the broad sets of material that I have and necked it down to something that is well suited for their situation and use. It's how to adapt my broad teachings to personal circumstances. And so they're different traders, and each one has carved out their own niche, and the course they're teaching is really aligned for people that are in that niche. So you might want to, if you're interested in that kind of intraday trading and short-term swing trading, those are some courses that are up and running right now, and we'll be adding to that in the near future with the Kata 2. So we've got the sniper course running. We've got the owl swing trading that Phil Wu and Griff Cooper did. That's up and running and doing pretty good. So I'd invite you to take a look at those. You'll see those on the website at tortoisecapital.net. That's everything I got for you today. Take good care, guys, and we shall see you tomorrow. I should also say, on 1 October, the pricing on the Creativity 202 course is going up. I'm putting a lot of personal time into building out that course to create the home study videos and to do the coaching with the live participants. In October, you're going to be able to take that course in one of 3 modes. The lowest price one is going to be $3,000 for self-paced lifetime access to all the material, well over 100 hours of recorded coaching material. All the coaching sessions that I've done with the participants on this cycle is all recorded with their permission and part of the course. So over 100 hours of that. The second version will cost a little bit more. I have certified a number of the participants in the true storytelling methodology, and they're going to be prepared to facilitate that course for small cohorts. And then the premium version of that is going to be me facilitating that for a small cohort. That's going to be the priciest one. The prices and all that go up on 1 October, and so you might be interested in checking that out and getting in at the discounted price now. So that's everything I got for you today, and we shall see you tomorrow. Take good care.